Welcome to the Trading Bell Show. I hope you're keeping well. How is the economy? How is the state of the markets on the analyst's eye view? Now, today we have in the house Samuel Gichohi, who is the head of business development at NCBA Investment Bank Brokerage, and he's going to help us understand how are the sectors doing, from the banking sector, agricultural sector, commercial sectors, everything else that forms this particular market. Samuel Gichohi, welcome to the show.
Thank you for having me.
Great. And my first question to you is quite a generic one. How is the market doing? Short answer.
Not very well.
Not very well.
Yeah, volumes are very low.
Yeah.
Foreign exits continue. They've slowed down, but they're still happening. I think there's a lot of external risks. The dollar is still, the shilling is still under pressure.
Yeah.
Inflation is still quite high. Interest rates are rising, so we're having, the yield curve also is flattening. So basically, the market is in a situation which we probably haven't seen before, where both the fixed income and the securities markets are seeing very low volumes, and that is a really unprecedented situation. Of course, investors also don't have money in their pockets, so they're not really investing. Volumes are very low. Yeah. You saw Nairobi Securities Exchange announce a profit warning, so that just tells you.
Okay. Samuel, it's quite interesting because, what would happen, we just came from a very, if I may use the word, stable election, and you would expect that the market would sort of respond to that by really doing well, but we haven't seen that yet. I think this is an oxymoron. I don't know what's your word on that.
Well, it's the global geopolitical issues that are happening. I mean, we're looking at possible recession in Europe. The war in Ukraine is still continuing. The US have had their own issues. The Fed has been increasing rates. So if they increase rates, then there's a tendency for flight of capital. Yeah. Because of the dollar, strength of the dollar, again, against the shilling, a lot of investors feel that they'd rather be holding, money abroad
where they belong. Yes.
So, and even the local investors, a lot are looking at it more like they would rather hold cash or safer assets until they feel that the market is ready.
You just mentioned that, and someone said something yesterday, and I thought, okay, that's quite an insight, that if investors have flocked here, foreign investors that is, it means they have seen an opportunity here. And we have always said that our market is foreign dominated.
Yes.
So when there is capital flight from them back to where they come from, local investors should take advantage of the fact that that opportunity still exists, and they should take advantage of it. I don't know what's your comment.
Well, they should, but what happens when inflation and a slower economy has taken their investing capacity? Because remember, then it's about disposable income. Yeah. And the economy has slowed down. A lot of businesses have slowed down. Yeah. So how much do they have in their pockets to actually invest? So the few who have are and have taken an advantage. Yeah. But again, when you have a relentless market decline, what will happen is you find the ultra high net investors, for example, maybe by the time, say, a company like, just to mention one, like Safaricom probably was at 32, people thought it would probably be a bottom. They buy, then it goes down and down. Oh my! And you keep buying and buying, but by the time it reaches where we feel right now is probably it's bottoming out. Yeah. How much financial power do you have? So again, it's a function of disposable income. Okay. And also the capacity for taking risk. Sometimes I think we have what we call investor fatigue at the moment, which needs a lot of discussion and investor education so that people understand that this is a good time to be buying with whatever you have. Just buy and accumulate so that when things start unraveling and coming back to normal on the global stage, and the foreigners start to view our market as an opportunity, then you're in and you can make some very good gains.
Okay, so Thanks for those insights, Samuel. And one of the other quick questions then speaks about how the sectors are doing, and I wanted us to have a dive into it. But top of mind is, we know the banking sector from the Q1, Q2, Q3, we have recorded quite amazing results, and definitely that reflects on what we expect to see the full year results. I don't know what's your expectation and why is it doing this well? And I know you're saying, people don't have money, but the banking sector looks like it's smiling all the way.
Well, foreign exchange is one thing. Of course, that is an area you'll see banks do very well.
Yeah.
You're going to see, you see, at the end of the day, we are still banked. We are still borrowing. And of course, in as much as there might be a bit of pressure, especially on importers in terms of their ability to pay back, I think after the COVID period, which saw provisions go quite high, there was a bit of a shift in how they manage the debt, the investors and the SMEs.
Yeah.
So that has also sort of was stable.
Yeah.
So we've seen the banking sector has done quite well.
Yeah.
And we expect double-digit
results
and dividends across the board.
Yeah.
I think only NHIF might not pay a dividend, but across the board we do expect to see a good dividend year on the banking sector.
Wow. Yeah. Okay. That's quite positive to start on. Let's get to the agricultural sector. And I'm curious because I have seen sort of like a migration from the old school products, that is the coffee and tea, and we are seeing companies like Kakuzi, the Sassinis of today, moving to newer products. I think I've heard about the macadamia, we've seen avocado and the likes. I don't know how generally that sector of the agricultural side is doing from your perspective.
Well, it's a good thing because then clearly we are starting to see outside the traditional areas. That of course diversity is good because then when we rely on one sector too much, then if a problem happens in that sector, then it can really affect even our general economy.
Yeah.
We've seen the likes of Pakistan not consuming as much tea because of their issues over there, and that will affect whatever we make from our tea sector.
Yeah.
That said, I think it's also important to realize that we have the capacity to actually, especially avocado, and we are now seeing markets like China which want to consume. Yeah,
in fact, I wanted to ask, are we leaning more towards the Asian market?
Not necessarily, because I think during COVID we did see a bit of a slowdown in those horticultural markets.
Yeah.
And especially if there's going to be a bit of a recession in Europe, then probably consumption might also be a bit subdued. But generally, I think that diversification is good. Some of these are probably not as affected by drought, because again, drought has really affected the agricultural sector. Okay. So if we have also some areas that we are starting to see, there are certain things that we can still export even when there is drought. It also helps us with our, we are a net importer. I mean, we need more stuff to export. Okay. I think, of course, a lot more needs to be done in terms of value addition. But I'm also seeing a lot of, I mean, even if you go to our supermarkets, you're starting to see local consumption of nuts and, the macadamias and the cashew nuts. You're starting to see local, locally grown stuff starting to come out, and shelves. I think that is also good for the market. But then again, we need also to be very careful about our food, because then if we're just growing stuff for export and our food security is still a problem, when there's a drought and we are not prepared, what happens is that inflation is really hit by the food basket, because then the last almost 1 year we are still in a drought. It only rained a very short time. So again, that pushes the cost of living for the common mwananchi very high. That means less money in their pockets, then that means less investment.
My goodness. By the way, there was a new development. I saw the Capital Markets Authority approved the coffee exchange. I don't know, for us who are watching, what does that mean?
Well, it's always good to have an exchange. The tea exchange is in Mombasa, and that also helps us in terms of price discovery and even our local farmers being able to to market their coffee. Yeah. So an exchange is always a good thing because then it increases liquidity, it increases the ability. As long as we have a good warehousing system, we are able to to bring our produce to that market. Okay. It's a great thing. I mean, having a market locally is a good thing. Yeah.
Excellent. Let's get into the manufacturing sector, which is, I think I've seen even the current government has a keen focus on it. And we're talking about we need to, as much as possible, have our own local industries expand their capacity to, manufacture things locally. But as you have alluded to, there's still a lot of pressure on the dollar. And the fact that we see quite a chunk, I think I have heard the CS on record saying that we're doing a lot of importation. But generally, I would like you to give us a comment on how that sector is faring on.
Yeah, well, based on what you're saying, I mean, we built the SGR, and I remember one of the industry leaders saying, we built the SGR, it's here now. The question is, what are we going to take to Mombasa on it? Are we just going to bring stuff?
Oh, that's a Mombasa, good one. What are we taking there?
Yeah, what are we taking down there? So that we increase, of course, that balance between our imports and our exports, a balance of trade. Yeah. So that's a key area. It's very important that we increase on our exports because, a country can't rely on services too much. We need to have something that we are exporting in terms, and we don't have much in terms of minerals. So, and we have the agricultural capacity, then I think that would be a good idea. In terms of manufacturing, I think some of our regional markets are looking quite stable, and we do export to some of our regional neighbors. But remember, they are also getting more, they're also starting to do their own thing. Okay. So it means we also have to shape up, we have to be competitive so that we are able to export. Okay. And of course, the shilling weakening is not a very good thing. Yeah. The shilling hasn't done as bad as some of the other currencies.
Other currencies around.
Yes. Okay, the East African ones, maybe Tanzania has sort of held its value, but considering we are a net importer, we don't have much in terms of minerals. I mean, there's all that importation of fuel, which is also, pushing prices high. Power is getting more and more expensive. Yeah. So that again is a problem for manufacturers because then your cost of manufacturing becomes very high. Yeah. And some of the raw materials, because a lot of raw materials we also import. Steel at some point was, went through the roof. Yeah. So even construction itself is being affected by that because they're now constructing a house with, steel prices being very high. You're right. They did come down a little bit in January, but there's so many factors. Yeah. Because now there's that inflation coming from the increase or the lack of so many things on the global markets. Okay. You see? Okay. You're right. Because of the Ukraine war. Yeah. And so you're finding fuel, steel, and now China is reopening. Oh. So if China starts to reopen, then it means they start being hungry for some of these commodities. Yeah. You see? Okay. So if they get hungry for these commodities, it means there is less of a pull. Demand from their end will also punish us to some extent.
Oh my. I think you've touched on certain other sectors. For example, you've touched on power. But my only question to you is this. We pride ourselves as being some of the people with the best sustainable energy forms. But I don't think we have felt it yet. And I'm asking this because we have wind power stations that are, we boast of some of the best. I mean, hydro and the likes. But our cost of power, as you alluded, is still on a high. Any comment on that? Why are we not seeing the fruits yet?
I think one of our biggest problems is that, for one, hydro is the cheapest. Yeah. Hydropower. But then when we have droughts and our rivers have less water, then we have to start shifting to the others. Yes. No, initially, of course, we also have geothermal. Yeah. Hydro does about 47 and geothermal does about around 36 to 39%.
Okay.
And then there's thermal, which does about 14%. And then down here we have wind, which is just 1%. But thermal and wind are more expensive.
Okay.
Geothermal is more expensive than hydro. So we initially at the base rely on hydro.
Yes.
So when the hydro starts to be, is not as much, and geothermal has just a certain capacity, the tendency is to increase on our thermal.
Yeah.
And if we increase on the thermal, then it means if the cost of fuel is up, then that will automatically, and the dollar is also stronger to the shilling, then that immediately means that the cost of electricity will rise significantly.
Wow. I'll come back to you on the insurance sector, and then we can analyze how the markets are doing through the week. But first of all, we take a break. We'll be right back right here on the Trading Bell. Welcome back to the Trading Bell. Today we are taking a deep dive into how all the sectors are doing in the market to help you make better informed choices. What's the future looking like? And I'm here with Samuel Gichohi, the Head of Business Development at NCBA Investment Bank Brokerage, to help us up. I think we have spoken about several sectors, and I just wanted to as well finally touch on the insurance sector. It's generally flat. I don't know, what's your comment on it? What's happening?
The insurance sector has one generally misunderstood sector. I mean, for some reason, Kenyans don't take insurance.
Why? Should we make this compulsory?
We have only like, I think, 2.5% penetration of insurance.
It's quite low.
At some point, it was 3% years ago, I think, when Britain came to market. So, again, you can see that's a decline. I don't know if we just rely on this, what are they called? WhatsApp groups we raise funds.
We raise funds through that.
But yeah, I think a lot of education on insurance needs to be done.
Okay.
And I don't know how it's going to penetrate. I'm sure the people in that sector.
Do you think the government coming in and probably making it a bit of a compulsory thing would work?
But you see, even when the government makes it a compulsory thing, they can't do it on a private sector level. They tend to come in with what, NHIF and So again, it's really a sector-wide thing. I mean, we are suffering the same problem in the securities markets.
Okay.
Especially getting the younger generation in, because it's not as fast as and as fashionable as probably it used to be. You know, and so we need to bring them in up to speed, and show them that it can be a very exciting space to be in.
All right.
But how to do that then needs to be a lot on social media and all that. So I don't know how the insurance sector is intending to do this, but I think they have also suffered quite a bit from fraud. We saw quite a bit of increment in fraud in the last few years.
Yeah.
So they have some issues they need to deal with. And once they do, and Kenyans understand better how to use insurance, and as we become, we're a middle-income country, we should be heading by now. Actually, we should be looking at around 11% penetration.
Yeah.
So 2.5% means there's a lot of work needs to be done.
Okay. I'd like you to make this final comment on these other sectors short. Let's combine the investment sectors. I'm talking about the Centums, the Transcenturies, and combine them as well with the telcos. That's Safaricom. What's your general comment on it as well?
Well, at the end of the day, telco fundamentals are good. Safaricom, they've got into a new market, Ethiopia. Of course, they're still discussing the licenses, say for M-Pesa. Yeah,
but the share has gone down.
Well, because foreign investors, remember, they look for liquidity, deal sizes. Safaricom is one of the big ones. Okay. Actually, the biggest one.
Yes.
So you would expect to see, if they're exiting, then Safaricom would suffer, and some of the top tier banks. Okay. But that's a telco. Safaricom is going quite a lot into financial services. We're seeing them try to do a fund management product. Of course, it's not yet on board, but there's a lot of other things happening on that end. Their fiber penetration is also growing. So they have a lot going for them. Okay. Fundamentally, they're quite sound. So the issue is, of course, the economy itself, and the market itself has those external factors that are affecting prices that don't necessarily reflect the fundamental position.
Okay. Investment sectors?
Investment sector, well, companies in investment sector are investing in most of the other sectors we are talking about. So generally they'll have something in what? Consumer, in real estate, in manufacturing, something industrial, development. They'll probably be part of the, public-private partnerships, you see. So generally, if the economy is not doing well, they will tend to suffer. Sometimes they even have portfolios on the market. If the market is down, then even their portfolios would be down. All
right, fair comments there. Let's get into the analysis of how week on week some of the stocks performed. And first of all, just a look at the indices from the All-Share Index 2025, all the way looking flat. I don't know whether it's going to allude to the same thing.
The market has reached a point where foreign exits have sort of leveled out. The locals are there. They don't have the purchasing power really to drive the market as much as the foreigners do. You'll notice the gainers and losers are mainly small cap, probably quite illiquid.
Yeah, actually on that, because when I look at the top gainers, for example, the topmost is Flame Tree, then we have Uchumi Supermarket, Kapchora, Crown Paints, Olympia. So these are not the usual
prices in what, 1 shilling, it goes up by 10 cents. That's
just a few cents here and there. Yeah.
So, and that just tells you, you'd probably now start seeing maybe people repositioning for dividends.
Okay.
That's where you'd see a lot of the action happening right now.
Yeah.
We're going into announcement season, so there's a lot of dividend hunters in our market. Considering our market was for very many years driven by dividends and not really trading for capital gains, which is what the younger generation would probably respond to more than the dividend model of investing, which we found to be the now for the older generation.
Yes.
But right now you'll see quite a bit of activity where investors think this one is likely or gives good dividends.
Yeah.
And I mean, if some of these companies are giving you, say, if you're looking at a company that's giving you some of the big banks, which will normally give you around 10% dividend, 10 to 12, sometimes even higher, and you're looking at T-bill rates at the 9.5, 9 point something levels, then it means if I can get that dividend of say 10% and I have a chance of making a capital gain because prices are low, then I would want to be sitting there. So it's not a bad idea to be buying right now.
Absolutely. And I think we have just the overview of how the markets are doing. I want to end with this question to you from an investor perspective and a financial coach as well. Looking at the market being stagnant, things looking low, is this the best time to invest if you have that spare cash?
Of course it is. I think what happens, and I'm sorry for maybe dragging this a little bit, is that ideally investment should be a habit. You see, a lot of people our mindset today is it's for somebody with a big wad of cash. But investment over time helps you to diversify over time because markets will move up and down. So if you bought something a little higher and it goes lower and you buy it lower, you've averaged down, so your price is lower. And if the fundamentals are good, over time you're going to make it's going to most likely recover. But again, there's that dividend element that is helping you beat inflation to some extent, also keep you liquid because some money is coming in, but also gives you money to buy more. So I think that notion of being savers and investors for the longer term is what needs to be emphasized. A lot of us want to get in, get some money, made by 5 and take it and go and spend it. Because we are becoming a consumer society. So it's a mindset that needs to start being ingrained early. I think our curriculum in school should include discussions about investing in shares, which it doesn't. We learn about what? What did you learn in school? Balance sheets?
I don't know.
Commerce.
Calculations.
Commerce, accounting. But you didn't learn about
investment.
But you didn't.
Samuel, thank you so much for your time. It's always a pleasure having you. Yes. There you have it. Remember, make your savings and investments habitual, as it has been said. And Samuel has put it as it is. I want to leave you with just a snippet of what happened this week when we had awards for students who participated in the investment challenge. And you'll be amazed at how some of them were really getting high percentages based on the information given. And you want to take that up, especially if you're a student, a young person waiting to get to know how to get into this market. Remember, you can always give us your feedback on the social media handles appearing at the bottom end of your screen. I've been your host, Maina Chege. Thank you so much for your time. See you same time, same place next time. Bye-bye.
I'm grateful to be a winner, second honors up at this year's challenge. And I'm urging all students to participate. It was such a pleasure being a participant at just concluded the Stock Exchange Challenge. It's been very refreshing, just a platform for me to learn how trading is done and even knowing some bit of company, and I'm so happy to be part of it.
I would like to encourage the other young people to take part in this investment space.
I want to make an appeal to the younger generations of Kenya to begin their investment journey by participating in the University Challenge.